Yo, what is going on, everyone? It is your favorite trader, the Master of Coin, and guys, today we are back with a highly requested video. We've all seen Bitcoin been melting the last few months, but I thought we're in a bull market. What's going on? If we're in a bull market, why is Bitcoin dropping 40% in a matter of 2 months? You see, guys, what I want you guys to understand today with today's video is firstly, why Bitcoin has been dropping, how you could have anticipated these drops, and thirdly, the next potential buying opportunities in the market and where we can see Bitcoin heading over the next few months and potentially even years. So first things first, when it comes to Bitcoin, we need to always understand the macroeconomics behind it. Now, what do I mean? You see, the fundamentals behind Bitcoin is that firstly, it is a piece of technology. And what we are witnessing over time is the adoption of a technology. You see, if we just look up, for example, an S-curve technology, this is what you're seeing on the Bitcoin chart when you look at a logarithmic scale on a much higher time frame. Now, before we do get into the rest of this video, guys, I do want you guys to know, if you guys do want access to mentorship, you guys do want access to one-to-one support from myself, yo, feel free to click the link in the description, send me a message on Instagram, we'll hop on a call, we'll have a chat, and you'll get my direct mentorship if you qualify for our program. But what I want you guys to understand here is when we look at Bitcoin on the macro scale, right, we zoom out, we go on a logarithmic time frame. The reason we go logarithmic is so that we can get a better perception of the market. Now, when we look at this on this log scale, what we can see is the overall bull market of the crypto space. Now, you always have to understand what sort of time frames you're looking at. You see, on the large scale, right, over the last, 10, 12 years, we've been seeing a huge bull market. But on the most recent few months, obviously, we've been in a lower time frame retracement. So when it comes to an S-curve technology, understand that what you're witnessing is the adoption of a technology over time. For example, we can see at the bottom we have time, right? The 1900s to around present moment. And, on the other axis, we have the adoption rate. So what's happening over time, more and more technologies are being adopted. For example, look at BlackBerries and iPhones, right? Very recently, BlackBerry completely shut off their servers, so you can't use BlackBerry phones anymore, yet alone purchase them from a retailer. But I remember, around 10 years ago when I was a lot younger, everyone had a BlackBerry. It was all on BBM, but no one had an iPhone. But now it's switched because the iPhone, the technology has been more adopted. And that's what's happening with the crypto market. This chart is a direct reflection. The price of Bitcoin is a direct reflection to the adoption over time. Back in 2012, not a lot of people knew about Bitcoin. Not a lot of people had it. So there wasn't as much money in the space. So the price was very low. Over time, the technology has been more and more adopted, so the price has been rallying. And what's been happening, we've been going over these 4-year cycles based around the halvening. Now, if you don't know about the halvening, guys, I do have a whole crypto crash course that I've done even a couple months and years ago, so definitely check that out on the channel. But what we can see is this halvening, these red lines here, happen every 4 years. And this is what essentially is controlling the bull markets. You see, if we see what happens at our first halvening, and again, I would definitely recommend researching into the halvening. It's basically when the supply of Bitcoin gets cut in half. In terms of, every 20 minutes, there's a certain amount of Bitcoin being released. And every 4 years, this amount of Bitcoin that gets released to the network gets halved. Hence the name, the halvening. So we saw our first halvening back in 2012. And what happened? We had an initial bull run. Price rallied before the halvening. We then halved. We had a huge exponential, rally in price. From there, we entered the bear market. Price then retraced. How much? We had around a 80 to 90% correction, depends on the brokers you're looking at. Then we consolidated, we accumulated again. Leading up to our next halvening, price then started to increase in price. We halvened, price went absolutely exponential. And then around the end of the year, November, December, the price started to crash. We accumulated again. The price had another halvening, and then obviously we started to rally. Now, one thing I want you guys to pay attention to is when this is occurring, when these crashes are occurring. If we look at our first crash, this was in November and December, just after the halvening. Look at our next crash, November, December, the absolute peak of the market, just after the halvening. And look what we've just had now. Just after the halvening in May 2020, peak of November, December, we've had another all-time high. And is it a potential coincidence that price has been dropping? Now, that was the first thing. That was the first piece of fundamentals that I wanted to look at, and which I have been looking at other crypto markets. And if you've been part of our other calls, you've even seen some of our videos, we have been saying at the end of 2021, this is a time we're going to be looking to sell. Now, we're never just going to blindly sell. We're always going to look for confirmations. And I want to show you guys some more confirmations and how we can interpret, this recent crash, this recent correction, and the next potential buy levels where we can be looking at in the market. So if we go on our daily time frame, right, we can see that we obviously broke a new all-time high, right? Price traded at around $68,000. Again, 69,000. We live in a simulation. $69,000 before obviously crashing. But what were the telltale signs that price started to crash? Well, if we go into our 4-hour time frame, what we actually could see is our initial break of structure and invalidation of demand. If you haven't seen the market structure videos, do check it out. But essentially, if you're in an uptrend in the bull market, you should keep printing higher lows and higher highs. Higher highs, higher lows, higher highs, higher lows, and higher highs. And then once this last low that leads to a new high is broke, this is going to signify that the bear market is beginning and prices are going to start to retrace lower. And what actually happened is we had our initial 4-hour break of structure. Our 4-hour break of structure being below this low here. So once price actually traded below this low, and again, we can look at the fractal nature. We can even go on the hourly, and it's still the very, very similar thing. But this was our first clue that, we was going to see deeper prices. So we're in an uptrend, right? And this is, again, those all-time highs. November, creating higher highs, higher lows, higher highs, higher lows, and a higher high. Now, I want you guys to understand the actual importance of these higher highs and higher lows. The reason the market is moving from this low to this new high, the reason it moved from 65,000 to 69,000 was because there was more demand in the market, right? There was a higher volume of buyers present, hence why the market rallied. So where is the demand entering the market? The demand is entering the market at this low. So what happened now? For price to come back through this low and trade below it, this is your first sign of supply being present. This is seeing an invalidation of demand. And if there's no buyers present, well, there's only sellers present. And basic economics, once supply exceeds demand, price will go lower. So this was our first clue. Now, after this break, where could we have potentially headed to? Well, once supply is added to the market, we're just going to go back to our next level of demand. And our next level of demand was in our daily structure, right? From this higher high, this higher low, and this higher high. Back on our daily/weekly time frame, right? We see we have our higher high, higher low, and higher high. So once we broke this small low here on the 4-hour time frame, that was given permission for our daily time frame to retrace at least to these levels of demand here at around 61,000. And then if we go in on a 4-hour time frame, we can see we had a smaller level of demand just below this low here. So ultimately, what we was looking for here, again, price did break this low, trade into this institutional candle, which could give you one potential sell entry. Again, you just mark it up from the wick to the wick. That would have been your institutional candle, your level of supply. Again, if you guys want to know more about these supply zones, again, I've got plenty of videos on them, or feel free to contact me and I'll show you a bit more. But once this supply zone broke, we're now going to trade into our next level of demand, which were these lows down here. From there, we didn't see any signs of accumulation. We did not see any demand at the market. Supply just came through, we redistributed, and price went straight through, tapping into this next level of demand. And again, if we look at our substructure in our lower time frames, if we go down to maybe the hourly, we did not see any demand come into the market. There was no invalidation of supply. We kept printing lower lows, lower highs, lower lows, lower highs, and lower lows. You see, guys, the market can only do a certain amount of things. It's either going to accumulate or distribute. It's either going to show you footprints of demand entering the market or footprints of supply entering the market. For example, if we accumulate, we're going to come down to a demand zone, manipulate lows, break structure to the upside, and start rallying. Or if we're already in an uptrend, we're going to consolidate, manipulate lows, break structure to the upside, and keep rallying. And that's our demand footprint. That's our accumulation or reaccumulation. Or supply is going to come in, where we're going to come up to a supply zone, we're going to manipulate highs, we're going to break structure to the downside, pull back, and continue to drop lower. Now supply is present because that's a Wykoff distribution. From then, we're going to redistribute. And I will put the actual photos of the real schematics on screen if you guys want a screenshot. But what happened next? We can now see more supply come in the market, where we again consolidate, manipulate highs, break structure to the downside, and that's your redistribution, and that's more supply coming in the market. So that's the only 4 things the market can do. Like, there's no other plays. So what happened then? We come to our demand zone, we redistribute. So now this is showing us that more supply is present. From a structural standpoint, maybe on the 4-hour, we just step it up a little bit. lower low, lower high, lower low. So this is our redistribution of price. This is an area where demand has failed, so supplies come into the market. We can now use this area as a future entry, another area for more sellers to show up in the market. And then what happens? More sellers come in, tap into this supply zone, and price begins lower. Now again, we can get into the fractal nature of the market and look at more supply zones. But again, what happened from here? Price creates a new lower low, lower high, new lower low. Our next point of supply in the market was this high that led to this low. This is our next induction of supply. This is our next distribution. So we can use this as a future entry. And again, what happened? Price comes up, respects it, creates a new lower low. From there, our most recent point of supply was this high to this low. What caused it? Cause and effect. Our distribution that caused this high was these sort of institutional candles here. Oops, let me mark this up. This supply zone, this distribution. We mark this up, extend it out into the future. Oh, is it a coincidence now that price is coming into these zones again and dropping and dropping? Like guys, during this whole market, so many people have been saying, oh, buy the dip, buy the dip. Guys, that is the worst advice you could ever be given. Don't buy the dip, buy the accumulation once you see the dips confirmed. Because again, we've been seeing the dip has literally kept dipping. So what happens now? We create a new lower low. More supply comes into the market. And all we're doing is we're traveling to next levels of demand. So from these supply zones, our next level of demand was down at 42,000 from a structural standpoint, right? We have our low, high, higher low, and higher high on our daily time frame / weekly. So this was our next level of our demand. This was our accumulation that led to an invalidation of supply. Supply sitting at these highs, supply sitting at these highs, supply also sitting at these highs up here. So this was the accumulation that caused that entire rally to the upside. So this was our next demand. And once price goes from supply, it has to go to demand. That's all the market is doing, going from supply zone to demand zone, supply zone to demand zone. And even back here, you could have seen these breaker structures. For example, once this structure here, this induction of demand, when demand entered the market here, once this come in, boom, demand fails, supply is present, pull up to supply, price drops lower, back into demand zone, which was the prior accumulation that led to that entire high. Like guys, this is not a coincidence. The markets are not random, they're very intentional. So what happened then? Again, if we want to go on an intraday and intra-week perspective, we can just be seeing more distribution occur in the market, right? We come into a redistribution here. Again, this is a redistribution, a drop-based drop, and this is our controlling point. What happens from there? Price comes up and respects it, and again, keeps breaking structure in the lower time frames. Have that initial break. What happens? Start trading lower. We then build liquidity to the upside. Price then manipulates our highs, then starts breaking structures to the downside. From there, we could have been looking at, again, more redistributions and just playing the order flow, because nothing on these intra-week, 4-hour time frames was suggesting bullish price action. So that's the last couple, months of price, being dissected. And again, from a Wykoff standpoint or even a structure standpoint, what do we have? We had distribution. After we distribute, we have a redistribution of price. After we redistribute, we're either A, going to tap into demand and accumulate again, or B, see more redistribution, and now we've been seeing more elements of redistribution. So where are the next levels that we can potentially be buying from? Now, this demand zone here is still actually holding, and the only thing that would invalidate this demand zone now is if we see bodily candle closures below 40,500. If we see candlesticks bodies start to close below this low, this is going to give us a much tighter indication that price will go lower. Now, because this is a demand zone, there is still potential for price to accumulate. And what I want you guys to understand is that everything is probabilities. And this is why when you're trading, you have to create if-then scenarios. When I trade, I don't just say, oh my God, prices come to my supply zone, so I'm just going to sell it. Because there's going to be supply zones everywhere. The key is being able to pick the correct supply zones and allowing the market to prove itself to you and verify that the supply zone is valid through what? Seeing a lot more lower time frame confirmations, and that's stuff that we ultimately teach in the mentorship. But what happens now? We're at this level of demand. So there's only two things that's going to happen now. We're either A, going to accumulate, and what's going to validate our accumulation? Well, either A, we're going to see a fractal accumulation down here, and what you'd want to see is price again. What's it starting to do is taking lows, taking lows, taking lows. You'd want to see it give a breaker structure, again, at least above these highs on the hourly. If it breaks above this structure here, that's going to give us a lower time frame accumulation. If it gives us a lower time frame accumulation, again, it could keep manipulating lows before breaking structure. But ultimately, what you want to see is this downtrend, which we're seeing now, getting validated by price giving a break of structure, starting to validate the accumulation, pull back, and then start to go higher. Now, if the 15-minute gives an slash hourly gives an accumulation, we can expect price to come back to prior supply zones, which would be these redistributions. But ultimately, what I'd want to see now on this higher time frame, on our 4-hour slash daily, is this large scale, if this is an accumulation, to play out. And our accumulation, again, if I'll pull up the Wykoff schematic now, this would be our seller's climax. This is price moving into phase B, and this is ultimately phase C of the market. So what we could see now is either A, another drop to the downside. But again, if price drops to the downside and starts invalidating this low, that's going to give me more indication that we're going to travel a lot lower to prior demand on the weekly. If I show you again, to around 33,800, this demand zone here. Now, this is again all if price wants to start closing below. Again, this weekly candle is going to close in 16 hours from this video. If we see closures below here, again, that's not going to be a good sign. But ultimately, we'll be looking on a daily. If price does start closing those daily candles below this 40,500 level, if price starts closing daily candles below this 40,500 level, that is going to show more signs that the distribution is valid, because ultimately, again, we've just been redistributing and redistributing. So the current leg that we're in now is between this high and this low. So on our daily time frame, before any sort of buys would be valid, in my opinion, we'd need to see at least this high get taken at 52,000. Break a structure to the upside, pull back into demand, or give us a fractal, reaccumulation here to go higher, and then we can look to take price potentially higher. But to be honest, guys, due to the time and price where we are in the halving cycle, it may be a little bit more probable for price to go lower. Now, we have to understand that everything's a probability. No one can be 100% in our predictions, but this is why before you risk your capital, firstly, you have to be comfortable with the risk you're making, and secondly, you have to be justified in taking that risk. And when you're trading as well, don't look at it on a single trade. One trade should not make or break your account. What you should be doing is having a big enough sample size of trades. I know I have an edge in the market, and I know my edge will not play out on a trade by trade basis. But over a big enough sample size of trades, my edge and my way of interpreting the market will ultimately give me that account growth that I desire. So when it comes to your trading, guys, look, you have to make your own decisions. Ultimately, you can't be relying on other people all the time. Of course, it's good to do research. Of course, it is good to, to learn. But ultimately, you need to learn with the intention to make your own decisions. So, again, if these levels fail to hold, which it may look like it is starting to redistribute. Again, if we start maybe closing above this daily redistribution around 43,800, we could see price trade a little bit higher into this range. But then again, we'll have to see what's going to happen. Are we going to come up to these supply zones, right? Are we going to travel into this redistribution? And if we do come into this redistribution, what's going to happen? Are we going to introduce supply, or are we going to introduce more demand? If we come into these zones, we start distributing, well, we can expect price to go much lower. We come into this zone and we start distributing again, we can expect price to go much lower. But if we start coming up into these zones, we start manipulating lows and breaking structures to the upside, that's your first signs of reaccumulation. Come up to this zone especially. If we start manipulating highs and breaking structures to the downside, that's clear distribution. And then from there, we can expect price to come a lot lower to around this 35,000 level, which is, again, the last accumulation that led to this new high in the market from our weekly / monthly swing. So if this zone does not hold down here again at 33,000, 35,000, and price does distribute again, the next area that I've got my eye on is this prior manipulated move, which we saw in March, starting from here, which is around 10,500. And from there, this would be that last down candle before the up move, which would be our last, basically our last level of demand, which also coincides with some very nice discounted prices around the 88.6. And again, we know from all the prior bull markets and bear markets, all the crashes, which happen at the end of the years, around 83, 90%. So what would happen then from this high coming down to that level? That would give us a very nice correction at around 84%. So again, I could be wrong. Look, I know that I'm happy with my risk and I'm happy with what I'm doing in my trading. That's ultimately, what I'm here to do. I'm just here to shine some light on some levels, which you guys, again, don't take my word for it. Go and prove these levels for yourself. Go and do your own research and make your own decisions. I mean, again, this is definitely a level, 10,500 that has potential. But ultimately, if we do make it down to these levels, certain things have to happen. Again, the market is very intentional. It's not random. It's not just going to do, things randomly. What's going to have to happen if price is going to come down to here? Firstly, we need to see price redistribute this area. And if that happens, we're now going to trade back into this demand zone. Again, if this demand zone down here is valid at 34,000, 35,000, what would we see? We'd see price come in, accumulate, then break structure to the upside, very similarly to what it did at this prior demand zone here, right? Where we trade into this demand zone. And then if we look on our 4 hour, we saw a huge accumulation where we manipulate lows, break structure to the upside. We have a fractal reaccumulation. And again, that would be your buy signals to get in a very profitable buy, whether that's margin or exchange or leverage. And then from there, we can see, price very, very rapidly expanded to the upside. And ultimately, guys, the crypto markets are not going to go in a bull market until Bitcoin goes into a bull market. What you got to realize is Bitcoin is literally the dollar index of the crypto space, right? What's the dollar index? You don't know what the dollar index is. It's the price of the US dollar, the US dollar currency index. And if the DXY goes up, US dollar pairs will go up. Simple. So you have to use Bitcoin in correlation with your other cryptos. Whatever Bitcoin does, the others are going to follow. So honestly, now I'm looking at Bitcoin to be potentially making another leg. Before I engage in any sort of shorts, I would want to see, again, price come up in some higher levels of supply, give us those distributions in these zones to then potentially take us down, to these levels here. But again, I'm not trying to predict. All I'm trying to do is react. Here are the facts on the chart. Here are our demand zones. Here are our supply zones. All we can do now is wait, react, and adapt to what the market is going to give us. Again, I'm not here to predict. No one can control the market. All we can do is control our reaction to the market and the mind in which we have when we interpret the market. You see, if price now just decides to come and make an all-time high, I don't care. And even if it goes without me, I do not care. And if it comes all the way lower and crashes to zero, guess what? I still don't care. You've got to be very, very detached from these markets. Connected, but not attached. That's the key. I hope this video did shine some light on the potential areas we can see maybe longs from or shorts from in the next coming weeks or months. But definitely keep an eye out for these levels, guys. This would be very interesting because we do actually have some liquidity resting here. So it'll be very interesting to see what happens. Again, ultimately, we cannot predict the future. We'll have to see what happens. Again, this cycle could still extend and it could even react from these levels. But again, that's why we react. We adapt to what the market gives us. And this is what the market has given us for now. So I hope that did shine some light on the recent price actions and what to be looking for from a Wykoff standpoint and a structure standpoint over the next few weeks, months and years. But don't get me wrong, on the super high time frame, the huge macro time frames on the monthly and yearlies, of course, right, we are still maintaining the uptrend. It honestly seems like we're just going to get another pullback potentially like this to go higher. But again, we'll see what happens over the next coming days and weeks at our levels of demand and at our levels of supply. So on the super macro time frames, of course, Bitcoin eventually will hit $1 million per coin, in my humble opinion. But that will maybe be over the super long term. So on an intraday, intra-week basis, here are the levels we've got. Let's see what happens. And with that being said, guys, don't forget to comment, like, and subscribe. And I'll see you guys all at the top, from the top, because the bottom is way too crowded. Sheesh.